Today's lesson is creating an income statement, where we'll review the uses of the income statement, basic sections of the income statement, and creating the income statement from the general ledger. Let's look at the income statement. Like the balance sheet, it's also usually prepared quarterly.
By the way, it's worth noting this has a lot of other names, such as P&L or earnings statement.
Yes, it can be called more than one thing, which sometimes people find confusing.
Now, how is this different from a balance sheet again?
The income statement shows the operating performance across a specific period of time, while the balance sheet provides a snapshot in time of the assets, liabilities, and equity. The income statement shows the net income or loss in terms of revenues, which is cash generated from sales, and expenses, which is money expended to generate that revenue.
The information it contains is quite different from a balance sheet. Also, unlike the balance sheet, which is a snapshot in time, this covers a period of time.
The income statement shows the net income or loss in terms of revenues, which is cash generated from sales, and expenses, which is money expended to generate that revenue. So it includes summaries of your revenue, which is your income amount from the goods and services the company sold. It includes cost of goods sold, which decreases your net income. These are direct expenditures and overhead costs incurred in preparing the goods and services of the primary products of the company. It also includes other expenses which decrease your income, such as cost of capital other than those already represented in the cost of goods sold, like depreciation, rent, interest, salaries. Now note that dividends are not an expense. Rather, they're a distribution of the profits, so they're not going to be shown on the income statement. And the last one would be other, which can be income or expenses. These are going to be items that are not directly related to the company's primary line of business, such as interest income on excess cash or losses on an asset sale.
Here's the ledger we created in the first lesson.
Yes, we created this in our lesson ledger entries. However, we're going to use it to create our income statement. We'll pause here, allowing the student to review it. Just press return or continue here when you're ready. Now, just like we did with the balance sheet, let's take a look at company XYZ's income statement. We start with revenue. We recorded a sale on February 15th of 25 units at $30 each. That's $750, and it's recorded here. Then we had a COGS of $250, which is our 25 parts purchased at $10 each, which were in inventory. This gives us a gross profit of $500. In our example, expenses were limited to the soldering station we purchased for $200, and we didn't have any interest or taxes, so that gives us a net income of $300.
Let's share with the students some follow-up lessons we have that can help them continue with their transition to management.
Absolutely, Daniel. I recommend the student review the lesson creating a cash flow statement, another one creating a balance sheet, third lesson that would be applicable would be ledger entries, and then of course the language of accounting. If you enjoyed this lesson, like us on Facebook, subscribe to our YouTube channel, and visit our website.